Okay, so let's take a look at some potential setup for Monday. So here's what I'm thinking. Um, and I haven't been doing this strategy. This is the first time I'm employing this strategy, which is to forward look and try to predict the setup or prepare for the setup in advance of the actual day. Because what I normally do is I go in the day and then in the morning, and then I try to figure out what type of setups, what type of game they're playing. Essentially, the way I think of it, it's really a casino game. When you're doing option tradings, you're more or less just gambling or professional gambling. It's a casino final way to make money off of casino games essentially, right? But the difference between a casino and the stock market is every day when you go up to the table or to the stock market, the game can vary from day to day. There are different games essentially from day to day, week to week, month to month, or whatever. The setups are different, the technical can be different, the characteristic may be different. So your job as a professional trader, option trader, is to try to spot the type of table, the type of game that are going to be played that day. So what I normally do is that in the morning I come in and then I let it, I'll let the setup go, and I go with a lot of basically a lot of instincts and habits that I normally see. But what I don't normally do is try to prepare in advance and do type of videos and setups in advance to prepare for the day that is to come and look for potential setups. So what happened on Friday was that I knew it was option expiration day, and I knew if you compare Amazon with the QQQ, which is the Nasdaq, you can see essentially what you're seeing here is that this is the Nasdaq and this is Amazon. So the Nasdaq was weak compared to the Amazon in this condition right here. This was the afternoon, right? Uh, 1 o'clock is the transition to the afternoon, or actually about 1:30 to 2. This somewhere along here is the transition to the afternoon. And so I said, okay, look at this. Look, Amazon is looking strong. This is the 5 minute, and I believe what's gonna happen is they're gonna break the 5 minute trend line, get hijacked in the afternoon, and that was what I had seeded in my head, which was based on what I was seeing with the volume, right? I was looking at the calls volume, the options, and on the 3500, and I was explaining how this was looking strong throughout the whole day. And so this type of I was looking for the setup. Essentially, it was feeding me the play to essentially look for the hijacked in the afternoon to go higher. What I failed to recognize was that the overall picture, the big picture, okay? I was playing essentially the weak hands. These are essentially this type of data that comes in intraday. These are like jacks and tens. They are deceptive. They're not strong compared to like ace and kings, double ace, full house and whatnot. I have failed to really assess that this was level to level, right? These are level to level. So level to level is like ace and kings. These are the strong technicals, the strong hands. You're not gonna win uh, jacks and tens, jacks and queens, double jacks. Those hands look strong initially, but they're going to fail when you are comparing it against ace and kings. 60-minute trend line, that's a king queen, Fibonacci line like this. That's a ace king. These are strong technical, and what this is showing you, if you look at the big technical, is that it was going toward the 60-minute line. That is the strong technical. And you also look at the daily. And if you look at the daily, you can see right here that line right here. Um, let's put that in closely. You see how that lines up? Um, right here. This is where that 60-minute trend line is going to head toward if they meet. If they meet, the line kind of just hit this bottom, which also hit right here, which also hit right here. So these are strong, this line right here is a strong technical line. It is a strong technical line. And it probably keeps going toward this one right here. So the strong technical lines are like the big hands, the strong hands. So it's like it's more powerful. And so what I was failing to see was the overall picture that this was more or less heading toward. So the probability is more or less heading toward this. Even though I might have gotten it correct, let's just say I might have gotten it correct and read it correctly, and then Friday it breaks out. I was gonna pick up 100, 200, whatever, which is decent, 300, 400, which is it may be even more. But overall, the technical would still be pointing toward this 60-minute trend line. Even if it goes up and ended the day at 3,500 next week, it still has a magnet for this 60-minute trend line, because this 60-minute trend line is meeting up with these. They are kind of just lining up. So to me, the overall setup for Amazon appear to be it's going to meet up with the 60-minute line one way or another next week, which is triple witching option expiration. Let's see. So this is 1, 2, 3. So this is the monthly expiration for September, which is Q3, which is triple witching. So what the best play to do on Monday is hopefully it's gonna be a gap up. So when it gaps up, so I'm gonna compare what I'm gonna look for on Monday is a potential scenario where you have a gap up, and then through the day you will see Amazon. This is Amazon, and this is the QQQ. What I'm going to do is I'm going to overlay the QQQ with Amazon, and I'm going to hopefully see that Amazon is lagging. So if it's lagging, the QQQ is underperforming. Okay, so if it's underperforming, the chance of it breaking is going to be pretty high, because the QQQ can break. Now, it may not break, but your statistics is still in favor that if it breaks, the QQQ is going to break. I mean, Amazon is going to break a lot harder. So that is the setup I'm going to look for. I'm going to look for a setup where hopefully, if I'm lucky, what it's going to do is try to test this 15-minute line. Okay, and it may not get there, because a lot of time, if it's up here, if it gaps up and they're not gonna let you have a nice setup like that. They know a lot of people are anticipating this 15-minute line, and right there they're gonna get in, so they're gonna go, you know what, I'm gonna try to get in ahead of it. And there's people who get in ahead of it, and so it doesn't get right there. It doesn't get right there, and then it fails. So but it may get there and it may overbreak. What they do is, this might be a trap. It overbreaks, it goes a little bit higher, and then it'll fail. So that's going to be a judgment call whether you're going to want to take it in advance, on touch, or on breach. That's but overall, whatever you choose, chances are, if it's weak, right? If Amazon is weak compared to the QQQ, the chances are eventually it's going to fail, and it's going to meet up with the 60-minute trend line. And you're going to see, hopefully, the volume on the puts, right? You're going to see the volume on the puts, something where it's continuous. Let's take another one like this guy, right? Where it's going to be the call volume is going to come in. The call volumes are always going to be heavier than the put volume, for whatever reason. There's always going to be more calls buyer than put buyers. but that doesn't matter, right? As long as it's all relative. If the call volume is weak ish, in relative to what it normally is, and the put volume is strong or continually coming in compared to what it normally comes in, that's enough to tell you that, yeah, it's gonna go. Hopefully, it'll go somewhere like to right here, right? This put right here might come down to and meet up with this line, which is around 34, 33, and that's where I'm gonna buy one put and maybe anywhere around here, maybe a little bit low. It doesn't really matter. I mean, yeah, if it goes down more, you're gonna feel a little bit of pain because you're gonna be down 200, 300, whatever, right? But if you hold on to it, which I would be planning on holding on to, and I may even sell one call option. I might sell one call option. Yeah, that's not really a risk management account. If you're buying one put and you're selling one call option, you're setting yourself up for a potential squeeze, right? And if you get caught in a potential squeeze, well, you're gonna be double hurt because that selling of that call option is gonna increase in value, and you have sold it, and that option that you bought is gonna be decreasing in value, so you'll be down, at least 1,500. 2000, 1500 to 2000, you'll be easily be down that much. So the risk management is going to be up to you, whether you want to try to double leverage. I don't know if I will, depending on how strong I see the signal, right? If I see the signal where Amazon it just looks weak, the volume is not coming in, it's weak volume, it's not doing anything, like it's just pretty much, if it's weak volume, it's just programs trying to get in and try to play with your head and whatnot. And then comes the afternoon, what happened is the volume is going to come in and it's going to fail that 15, and it's going to try to meet up with the 60. So if you have one put option and you sell one call option, you should make around 3,000 in my opinion. But again, if you get caught the opposite direction, you lose 2,000. So that's what I'm thinking right now as a potential setup that I'm gonna look forward on Monday. I'm going to look for those conditions. So now let's look at some other setup that may let's see what we got for other setups, right? So here, Apple, for example, let's just look at the daily right now. That's the weekly. And then here's the daily in the back. Yep. So Apple most likely will meet this. Let's say that is the 50-minute trend line. So it's probably gonna meet it. If it does, now it may, Monday morning might already be a crash. Hopefully not. So if it's a crash, not a crash, but if it's a gap down where the future market on the Nasdaq is down 100 points, which is, probably half a percentage on the QQQ or something like that, right? If you're looking at the Nasdaq, which is down here, well, anyhow, the Nasdaq Composite, I just saw it. Yeah, right here, right, which is at yeah, 15, like 100 on this is not anything. Right, the Nasdaq Composite is already at the 20. So if the future market is down to where it's already like at 1,500, that's nothing, to be honest. But it is a gap down, so the setup is different, right? Anything I say right now is basically depending on what the opening is for Monday morning. So Monday morning, if it's already down to this technical line, you wouldn't be playing what potential setup I'm talking about right now, because what I'm talking about right now is a potential gap up, right? Well, it's a gap up, and they might like just initial buying, and then it's not gonna get there. It's not gonna get to this 38.2. It's gonna fail. Well, if it's gonna fail, it's gonna meet up with this 50-minute trend line, And that's so what's that's gonna look like. This is 15 minutes right here. Let's see what the 60 look like. It's already below the 60. So yeah, so just wherever this one right here is, which is I'm not exactly sure. Let's see. 146, 146.86. So 146.86 is like probably right here. Yeah, 140. Yeah, so it'd be like right there. You know, right there. 146.86 looks pretty nice, to be honest. Looks like a nice line that looks kind of look like a technical line to me. Looks like a technical line to me, especially when it's already below the 60. So why not meet up with this area where it looks like a nice line that potentially can react up? And if it's react up, then it's every these type of doji bottom, doji top, or reversal candle, whatever you want to call it, where it has this pointy tip. These pointy tips. These are technical lines, meaning they're technical marks that if it bounces off of it, it's written in stone. Once it bounces off of it, it's written in stone that that's a technical line. So what you're doing right now is you're looking for potential technical lines that essentially what the programs would do is it'll go down to it and then it'll go up, which becomes a confirmed technical line because these jagged points right here, they're kind of like written in stone, or not written in stone, but they're like there for you to see. And once it becomes evidence and the ink is dry and the curve has been written, then it becomes, yeah, oh yeah, there it is. It's the line has been drawn in, and it's right there, right at this technical line on the 50-day moving average. So that's where I think Apple most likely is going to meet up. If the setup is right on Monday, that's what I may be playing. I don't normally play Apple, but I may play it because now I have the setup in mind, and so I know what to look for because I'm doing the analysis right now. So Google, for example, what would I be doing on Google if I be doing Google? I won't be doing anything on Google, to be honest. There's just nothing there for me to see. Now, if I was to sell a straddle, I would do it on Bookem, to be honest. So I was just thinking about Bookem right here. If I were to sell a straddle, so if I were to sell a straddle, I would hopefully this will gap up on Monday, and I would sell one call, one call option, and then hopefully it'll go down. And even if it wiggle around a little bit, go up higher, who knows? I don't know where I'm gonna sell it. I mean, if I get lucky, I sell it all the way up here. And then, but I won't sell it if it goes too far up. Then I know it's not gonna meet this 60. But if I sell it and the condition is right and it kind of reverses, I'll sell one call option, and hopefully it meets up with this 60-minute trend line. And once it meets the 60-minute trend line, what I'm going to do is sell the other leg, which is the put option. So I have one call option and one put option, but since I sold the call option up here, I'll have some intrinsic value to it, and then I'll sell the put option, and hopefully it'll stay in this range. Right? If it stay in this range, which I believe it should stay in this range, and you say, well, what if it meet up with this guy right here, which is the 20, what if it comes right there, which is 267? Well, 267 is, what is 267 down here, right? Yeah, it could do that. So if it goes down there, but you have sold your call option up here, and yes, you're gonna be losing money on the put option, but hopefully, even if it goes down to here, it might it hopefully will bounce, right? So it'll bounce back up. And so I would be selling, if I would do it on Bookem, I would sell it, let me say, maybe a week out, or maybe even 2 weeks out, right? So October 1st on the 230. So that theoretical value is 58, and over here is 61. So it's around 60. So 60 is 120. So that's 120 value on this guy at 2300. So it would have to go all the way down to this level for you to break even in 2 weeks. In 2 weeks, if it goes down to this, no, that would be 3 weeks. In 3 weeks, if it goes down to this level, then you will break even. And if it goes up to this level, you will also break even. Now, I'm not gonna hold it 3 weeks. Obviously, I'm not gonna hold it 3 weeks, right? So I may either do September 24 or October 1st. Probably one, I don't know, maybe, yeah, I don't know right now. One of the two I will do, but I'll probably hold it, 2 days, 3 days at most. I will hold the straddle, right? And I'll collect, hopefully 1,000, 2,000. That should be sufficient as for 2 days, 3 days. Yeah, hopefully 2,000 is what I will be hoping to collect on selling that straddle. So that is what my potential setup on Bookem would be. Um, like iSurge, let's take a look at iSurge. So there's really nothing there on iSurge. I was, I'm not gonna play this guy. But let's look at the market by market va value. So there's Apple we talked about, Microsoft. Yeah, Microsoft is so strong. I don't know, like is it gonna meet up with this 50? It may not. Who knows? Facebook. Ooh, Facebook. Like I haven't looked like Facebook. I think this looks to me potentially like a good setup. Where's the weekly chart at? This is the 60-minute. I think the weekly is down. Yeah, right here. So yeah, so look at that. That weekly is looking. That's a confirmed double doji on the weekly. A confirmed double doji on the weekly. I mean, when was the last time we seen a double right here? Right? I mean, this is this is classic reversal. I mean, this is too pretty of a reversal. I mean, I can't believe I didn't see this. Oh, because it ended like the week it ended like right here, and then it probably gapped down, so it was probably hard to see this. But yeah, in hindsight, now that you're looking at it, this is classic reversal, right? So where are we at right here? Double doji top too. So I would say, here's a double doji top. So here's a double doji top where it kind of trick you. But how many times can they trick you, right? Like one time here, maybe do they trick you again? I don't know. I don't know. I think like this doji, at least, you should be able to get enough to get down to here. And if it gaps up, and if it even try to do an initial squeeze, if we are lucky, or if I'm lucky, and it does an initial squeeze and get anywhere from here, I'll probably either sell one call option or buy a put. Either one. They're more or less the same, except the put has more value potential and the call is more of a risk management. If you're selling one call option, it's more of a risk management account. So I might sell one call option or buy one put, and hopefully it meets up with the 60. Now, when and if it does meet up with the 60, I probably won't sell the other leg. I probably either cover it. Most likely, I will cover it. I don't know if I'm gonna, because it can keep going down. So what I don't want to do is a break of this, and then I'm selling the other leg, which is I'm selling one put option, and then it breaks. Well, now I'm just flat even because that put option gone up in value tremendously, and my call volume, it didn't lose as much value as what I lost on the put option. So I would not be, if it meet up with this line, I would not be selling the put option. I would just be covering, either if I bought the put, I would be covering the put. If I bought the put, I would be covering put. If I sold the call option, I would be covering the call option. So that is Facebook. Tesla, always a difficult play on Tesla. Like what can you do? This is the 60-minute, like it's already there at the 60-minute. Like Tesla is already at the 60, so I don't know what to do. Six, I mean, this Tesla is just, I can never really figure out how to play it. Like you say, well, look, it's gonna hit the 60 and it's gonna bounce. You think so? Like it hits the 60 here, so this is the second time it hits the 60. So the second time it hits the 60, maybe it'll go down even further. You know what? Like there are times where, like here's the 60, right? Like it broke the 60, so you like if you think it's gonna bounce on this 60, you are in a world of pain. And if you hold it here, that's a lot of pain before you get back to the 60. And this 60 right here is not even, you still may be at a loss. Especially if you bought the call volume, you're still at a loss. So yeah, that's a lot of pain to be honest too, because it could have keep going down. You never know. You never know if it keeps going down. So this 60 might just be a trap if you play. I don't know how to play Tesla. At least not right now. I don't. Nvidia is a strong one. Um, Nvidia is always strong. So I don't know what to do. I mean, I hate to try to play this guy because it can obviously just keep going higher. What I would do on Nvidia is that if you get lucky and get a discount, for whatever reason, bad news like Apple or a huge market collapse, I would not mind holding a significant value of this in my portfolio. I'm actually in the belief that Nvidia, wow, 562 billion. This is so expensive now. Whoa, for a chip company at 562 billion. My goodness, it's so expensive. So what is a discount when it's this expensive? Like only a year ago, it's like not even, 100 billion 2 years ago, and now it's like 562 billion. So, yeah, I don't know what would be a good discount to get. However, I think long-term Nvidia is something I wouldn't mind holding in my portfolio. Same thing with BABA. I mean, Baba is another Boeing, to be honest. Like Boeing, if you look at Boeing when it was damaged during that time right here, I mean, I should have I should have bought a lot more Boeing when it got down to here. To be honest, I'm still kind of kicking myself that I didn't buy more at 100. I forgot how many I bought, but I did buy it and then I sold out like somewhere along here. But at some point I should have just held on to it. I'm still kicking myself. So Baba is a potential Boeing, but I don't know. It's a Chinese stocks, right? Is the situation kind of the same? I don't know, but it's a nice. I think it's decent to get. I don't know. It's hard to say, right? Because it can keep going down, but you would think eventually there would be a bounce in this guy if it does get to 150. I would probably buy an addition. I do have something. I'm probably down like 5,000, 6,000 on one lot of Baba. I do have one lot of it. And I might buy a second lot when it gets down to 150 on my 401k. But yeah, and then of course mRNA is the other one that uh, is really of interest right now, right? So this is want to be a high flyer. So I would be paying attention to this one, and because potentially it's gonna be one of these guys right here. So the first time through, you got all these shorts to cover, and then boom, they were able to successfully attack. The second time, will you get that somewhat of a capitulation? I don't think it'll get back to this level, of course, but will you wait for that capitulation top or that final that squeeze? If the condition is right, you will get that. I mean, can it even break this? I guess anything is possible, but let's say it doesn't break it. You get that kind of like wiggle right here. That's right here. I think that would be good enough to get either one put option. Just buy one put option and hold it for something to meet up with this 60-minute trend line, right? You see how it meet up with that 60-minute trend line, the first go. It's all the 60-minute trend line. I'm telling you, this is an ace trend line, to be honest. It's an ace king trend line. If it's going down, it's gonna meet up with it. It's gonna play with it. It's gonna go above it. And then if it's weak, it's gonna meet it again. And then here you can see it's just a trap. Boom, then it meet up again. So the 60 minutes is an ace king trend line. 15 is decent, but not as strong as 60, but it's still a good trend line to look. So at this point, it's above the 15. So I would say, I don't know, it may meet it, it may not, but the setup that I will be looking for is hopefully one where you get that wiggle. I guess this guy right here, right? Something up here, that wiggle, that boom, 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 and then I'll buy a put. So those is my play for Monday, and obviously the technical right now, with the Q below the 60. Let's see, it's at this could bounce, right? So the setup I'm hoping for is a bounce on the morning and a failure. That's the setup that I'm hoping for. It probably won't do that, but that's what I'm looking for potentially. The QQQ, I mean, if it does bounce, I'm looking for a bounce above this 20, which probably meet up with this 60, and then a failure. So I'm looking for a failure of this 60 technical line on the bounce on Monday. Now, if Monday opened up really weak, the setups will probably be different, completely different. But I'll probably have to re-examine what strategy to play. But if it goes according to plan, those are the strategy that I have in mind for Monday option trading.